this is the most successful ETF launch of all time. I mean, we've never seen anything like this, and it's only really just started. I don't know, Dan, what do you think?
Not even the beginning of the beginning. I mean, you have trillions of dollars that now have a one button push.
These guys are not traders in the whole. These RIA networks generally talk to their clients about, you should think about an X% allocation. They put an X% allocation, or they mandate it and say, hey, we're going to do this for you guys. They do it. And then what happens is, Dan and I have seen this all the way through with friends of ours. They start with 1%, and then before you know it, they get up to 5%. And they're like, fuck it, we're going to 10%, because they start to understand the power of this thing. 8 trillion in these RIAs. That's all that's happening really right now is RIAs. Now, you've got to understand how these RIAs work. And Dan knows them because a whole bunch of investors in his fund. These guys are networks. They're not like brokers get on the phone like buy, sell. They go and have a steak dinner with their best client who talks about this Bitcoin ETF. They're like, I'm not sure. They read Barron's that week. They're like, I'm not sure if it's the right thing to do. They then go and play golf. Their other client talks about it. And eventually, you know, this huge property developer from Cincinnati then sticks in, you know, $5 million into the ETF. This is the process. So it's actually really slow. And we've only just started. And a lot of these people are driven by price.
That's what you said.
If you look at NVIDIA, you see how price feeds on itself. It becomes reflexive. So we've just started. These guys are not traders in the whole. These RIA networks generally talk to their clients about, you should think about an X% allocation. They put an X% allocation, or they mandate it and say, hey, we're going to do this for you guys. They do it. And then what happens is, Dan and I have seen this all the way through with friends of ours. They start with 1%. And then before you know it, they get up to 5%. And they're like, fuck it, we're going to 10%, because they start to understand the power of this thing. So it becomes very reflexive in price action.
As Bitcoin continues to break new heights, several investors have speculated on the next significant price surge for the leading cryptocurrency. And Raoul Pal, who's the co-founder of Real Vision, predicted that the asset would break the $250,000 price mark. He also shared speculative prices for Ethereum and Solana. He currently believes that Bitcoin could really break the $250K mark. Raoul Pal shared this prediction during an interview with Anthony, who's the founder of global investment firm Skybridge Capital, and Pal made it clear that he doesn't like making a price prediction normally, but still he insisted on stating that Bitcoin will likely soar to $250,000 price range. And one of the main reasons why he believes this could happen is because right now the demand is a lot for Bitcoin and the supply is less. There are only so many Bitcoins in the world that one could buy, and because the demand is so much right now, Bitcoin has nowhere to go but up, and the speculation is fueled by the current dynamics of the spot Bitcoin ETF, an investment vehicle that has raked in billions of dollars within the United States market. And over the past 2 months, the Bitcoin ecosystem has experienced an impressive bull run due to the active purchases of these ETF products from several companies offering them. Pal's speculation also comes ahead of the anticipated Bitcoin halving event, a process where block reward will downsize from 6.2 Bitcoin to 3.1 Bitcoin. And earlier today, Bitcoin broke a new price peak of nearly $72,000. That price mark was surpassed at press time, bringing the leading cryptocurrency Bitcoin to $72,100.
You've got to understand that a 5% interest rate is not a hurdle to an asset that goes up 100% a year on average, right? It's irrelevant. But liquidity drives assets. So liquidity did pick up, but as Dan's rightly said, the game is only just started in the liquidity cycle. At the end of this, I mean, the Chinese are in the middle of pretty much a debt deflation. They're going to print money, serious amounts of it. The Fed are going to cut. The Europeans are going to cut. The Fed are probably going to end up bailing out a few banks. You know, the whole game is to be played. We've got an election to bribe voters with. There's usually, straight after the election, there's usually a fiscal stimulus. Let's say Trump gets in. He'll probably do a stimulus. You know, there is money to be handed out all over. The surprising is, yeah, we had a very strong run even before the halving. It's early in the macro season, but it is what it is. Cycle to me is driven by the macro. That macro cycle has been the 3.5-year, 4-year cycle, and it's the same cycle in all assets. So I don't see any reason the cycle would change. unless we create some sort of weird monster bubble in crypto, or we just got a very strong cycle on our hands. Some cycles are stronger than others. And the last cycle, I thought cut short. I thought there should have been a next leg higher. I thought it should have got to 100, and it didn't. And I think people have PTSD from that. And so I think they're fearful of screwing it up again and getting too bullish. And I actually think there's actually more of a fear of something like 2013, where it kind of had a dip. Everyone thinks it's over, and then it went up like another 4x, something stupid. I think the bubble cycle's actually maybe a higher probability now than this left translated. When I talk to people about the left translated, when you ask them, it's just PTSD.
How long is this macro cycle going to last, in your view? Give me your views on the macro cycle.
From the everything code work that I've done, that I've talked extensively about, it should be normally it's right towards the very end of 2025. Now, could it be a little bit earlier? But normally the crypto cycle ends in November, December. Every time.
Raoul also made some price predictions for Ethereum and Solana at a request. Pal shared speculative prices for the two leading altcoins, Ethereum and Solana. And for Ethereum, the Real Vision founder projected a price surge between $15,000 and $20,000. And the speculation comes amid anticipation for a spot Ethereum ETF in the US financial market. And other catalysts that can take Ethereum from its current price to such heights. Include its ongoing upgrades like the Tenkan upgrade. Ethereum currently trades at around $4,000, and for it to go up to $20,000, we're talking about a 5x. One might say that is too optimistic, but hey, Bitcoin has been on a wild run the past 1 month, so anything could be possible. And Pal also predicts that Solana will soar to as high as $750 or $1,000, and the asset currently trades at just under $150. So even with this cryptocurrency, we're talking about another 5x, according to Raoul Pal. And macro investor Raoul Pal has predicted a crypto summer and a massive altcoin season after the Bitcoin halving event and into 2025. And he said that the summer has already started in a post on Twitter, and the prediction is a part of his everything core thesis that explains market movements due to macroeconomic influences. It is all driven by liquidity, which bottomed at the end of 2022, he said, before adding that macro summer and fall are all about liquidity rising, and liquidity should rise all the way into the end of 2025. And he added that the bigger game is the alt season or the banana zone, he said, presumably in reference to the massive gains and parabolic price charts for some altcoins. But the bigger game is yet to be played out as alt season arrives and we fully enter the banana zone. The banana zone cometh, and it is a huge wealth generation machine. And he argues that today, asset prices are primarily driven by central bank monetary policies and debt levels rather than traditional company fundamentals or economic growth. It's all about preference. And high government debt levels globally require central banks to print money via quantitative easing to make interest payments. And this creates a cycle where more quantitative easing is needed every 3 to 4 years as debt rolls over.
I've seen family offices. I've got one of the investors in my fund is a big Australian family office. At first, their allocation was 1%. They probably got up to 20% in crypto allocations in the end, because once the principal started to understand it, that it just keeps building on itself, and the price action just builds on it. So we've, as Dan said, we're really, really early still.
I would say that also many people, will do a dollar cost average. So this is, someone will say, okay, I'm going to 3%, and they do 0.5% every quarter for the next, few quarters. So I think there are a lot of people who purchase things like that. Very few people just come in and say, okay, put 5 million in, it's an all-time high, I don't care. A lot of those guys will do, so I think that you have to expect that there's a tail to many of these purchases that Raoul's talking about.
And then there's also these massive platform models like BlackRock, Fidelity, Morgan Stanley, JP Morgan, that suddenly add it to their asset allocation mix. And those guys control like $1 trillion of assets. So once they do it, it's the same process. It then starts dollar cost averaging in. And, we've seen BlackRock talking about doing that. I don't think it's even started yet. So those massive pools of capital start coming in as well. And we're not talking institutions. None of the institutions are in yet, really. Also, don't forget, the 401k bid in America is another big thing. One of the reasons passive funds have outperformed active portfolios, like the NASDAQ and the S&P, keeps outperforming, is because millennials, every 2 weeks, add to their 401k of this stuff. They can now add Bitcoin into their 401ks. So that becomes a every 2 week bid that goes in perpetuity forever. Now, it doesn't mean it can't go up and down, with the business cycle, but it's a very big structural change that people don't really understand.
And this leads to a debasing of fiat currency, causing asset prices to bid up, irrespective of company performance or valuations. So this has nothing to do about how well crypto is doing. This has everything to do about how the other industry is doing. And tech and crypto usually outperform in this environment as their growth potential offsets the debasing effects on quantitative easing. And moreover, central banks are trapped in this everything code by larger demographic forces like slowing population growth, which reduces GDP growth and increases quantitative easing requirements to service escalating debts. And the work we have done on the everything code in Global Macro Investor has been central to my investing strategy and got us max long tech and crypto in December 2022. And Raoul Pal is not the only investor predicting a big alt season ahead. Crypto investor Leandro told his 106,000 followers on Twitter that the alt season will come in the next 2 to 4 months. And currently, Bitcoin still dominates with a market share of 54%, and only when this dips back to the mid 40% levels as it did during the last cycle will the alt season really be in full swing. But as of now, it's all Bitcoin.